Everybody, this is Wes with Pikes Peak Trades, and wanting to give you a weekend video update here after a really negative week, especially Friday in the markets. At a crucial juncture, wanted to jump in here and let you know what I'm looking at, explain some technical readings that I'm watching, talk just mainly about ES and NQ on the futures, and then SPX and QQQ for cash market hours. We're certainly at that point where caution is warranted and justified, but we're also at a point where the level of oversold conditions is what we've seen in the past that has led to some pretty big rallies. So I want to start with that. So we're looking at a chart that combines the NYMO. So here we have the McClellan oscillator, and we've got the VIX and we've got the SPX kind of layered and stacked. And I want you to look at that massive VIX spike on Friday. So depending on what month of futures contract you're looking at, anywhere from 27 to 30% on the spike in the VIX. And you can see that that's not out of the ordinary. Even over the last few months here in mid-July, we saw a big spike, and we saw another big spike in mid-August, and a big spike in mid-September. Seems to be a theme, kind of right around the mid to the end of the month. We've had some fear-induced spikes. Now, what I want to follow that with is notice what's happened in all three of these times immediately afterwards is we had a big rally. VIX way down. So SPX up here, VIX way down, SPX up, VIX way down. And that's what needs to happen here in order for us to resume this bull market is we need to see, and ideally it happens on Monday, we need to see a big SPX rally off this oversold level to punch that VIX back down inside its upper Bollinger Band. If we can get that with SPX closing back inside its lower Bollinger Band, then I will say with some certainty that we've got one more big leg up coming in the stock market. Okay, now, one part of that triggering system that didn't happen is we actually didn't see the NYMO beneath its lower Bollinger Band. And that would be pretty rare. I would just point out that it was already in oversold territory through the early part of the week, really the end of the prior week, which was our indication that market conditions were weakening. When I show you some of the Elliott wave counts, that'll become a little bit more obvious that we should have had some doubt about whether we were going to just extend upwards through the holiday week, which of course violated seasonality. But that's one of the reasons why I don't put much stock at all in seasonality. I'm much more interested in pricing technicals. So what I'm leading to here is it is possible that we need more selling on Monday to actually get that MYMO down and closing beneath this lower Bollinger Band, which would mean then that the VIX would stay elevated, the SPX would likely continue to close below its lower Bollinger Band. And if we get all three to trigger on Monday, then I'm going to say with a little more confidence, we're probably ready for at least an oversold bounce and possibly a new rally. Okay, so let's look at some charts now, and let's start with a little bit of a bigger picture frame. There was a lot of technical damage done on weekly charts. Here in the ES futures, we've got an outside engulfing bearish week, and that has happened quite often since March 2020. We had one in June of 2020, and notice that the next week we spiked lower early in the week, but then we resumed the rally. Had one in late August and early September 2020, and that outside bearish week continued down for the rest of the month. So that count, that possibility would be here in blue. If this needs to continue down through most of December, maybe kind of like what happened in 2018, we had the Fed that was increasing interest rates maybe prematurely. Here we had some supposed news that the Fed is going to start tapering earlier. If that's kind of rhyming here historically, then that would be the blue count. And that would be pretty painful. And it would most likely push markets down towards here the 50-week SMA, which would be here on ES just over 4,200. So the corresponding level on SPX also just over 4,200. And that could either break or challenge the low that we saw here in late September, and early October. Now we've got some other outside bearish weeks to consider. We had one again in January 2021. It spiked lower the next week, but reversed higher and then kind of set that higher low before a big rally. Had another one in May of 2021. We had a down week that followed, but it was an inside week. So not an overly bearish week that resumed the rally. We had another one here in September of 2021, and that one did result again in a higher degree sell-off. So the data suggests that when you see the technical damage on a weekly level, at the minimum, I would say the most bullish expectation is that we probably do get at least a spike lower Sunday night and Monday. I would be very surprised if Sunday night futures we saw runaway green. I really, really don't think that's going to happen. I think it's more likely that we see a spike lower. Okay, now to what levels? Well, when I get into the smaller time frames here, I'll kind of show you what we're looking at. I already talked about the most bearish scenario that I'm willing to consider right now. If we needed to continue to work lower here, looking at the daily, so where could it go? So let me just point out to you on the ES Futures Daily that the significant pullbacks since November 2020, almost every single one has touched the 50-day. So you can see this minute 2, a minuet 2, another sub minuet. Here's a 4. This would be a sub degree 4 of this wave 5, another degree 4, this sub degree of this final wave 5, and then of course we're cutting through it for bigger pullbacks. And that's where I would think. So my primary count would have, I think, probability suggests we're probably in need of the ES to at least move down and try to reconnect here with the 50 SMA. So that would be, if I had to place money on a bet, Sunday night futures into Monday, that we do see it red, we see it spike lower. And then if we combine that with the NYMO, the VIX, and the SPX Bollinger Band conditions that I began the video with, I think that is what could then lead us to a powerful rally. Okay, now, if we need to work even lower, disregarding for now that more bearish blue count, there is what I would put in purple, because ultimately it would be even more bullish, that this could actually be a 1-2. And I'm not yet willing to entertain that unless we see closing below here at the 50 SMA on ES or on SPX. But I've got that count in my back pocket in case, from a geometry perspective, we need to go back and test that very lowest rail here of this channel. Okay, so that's what I'm looking at here into ES. As far as a short-term count, I think the most bullish scenario is that this is a simple zigzag down. So 1, 2, 3, 4, 5 into an A, 3 up into a B. And when I said that there were some clues, not only from NYMO, but also on the Elliott wave count, it really should have been this B wave. So here, starting on Tuesday of Thanksgiving week, and then moving through into Wednesday, and then we saw that ramp, into holiday hours, but it looked just like a 3-wave move, and that is your clue that this is probably going to be met with another selling leg, and absolutely, of course, overnight Thursday on the new Omicron variant news and potentially Fed earlier taper, just a waterfall down. 1, 2, 3, 4, 5 is what I would be counting into a C leg if we've reached some 1.618 fib extension and we're ready to bottom. But as I mentioned, this could just extend down, and then this would catch it at a lower 4 right here, right around the 50 SMA. Okay, now each index and ETF counts uniquely. So let's take a look here at the NASDAQ, and let me get into the daily first. I won't show you the weekly. The weekly candle is just as ugly as the SPX. So looking here on the NQ futures, we got to do things a little bit differently because unlike ES, it did not break the November 10th low. So I am leaving in the possibility, if we get a surprising bullish resolution Sunday night to Monday, because that low here on November 10th at, this would be about 15,896.5, if that holds, that this could be a 1, 2, 3, 4, 5 up into a larger degree top. Okay, now I'm leaving that on the chart just because the level hasn't broken, and that's kind of my standard operating procedure. I always keep these alternates in the background, but what I actually think is going to happen is that this low will break, and then we're looking just like ES for a lower shot target on this wave 4. Okay, so if that ends up meeting close to the rising 50 SMA, that's been a pretty good target. Just like, going all the way back into early 2021, typically these pullbacks are looking to touch here, even on the stronger tech index, the 50 SMA. Okay, so I imagine at some point Sunday into Monday, I'm going to be switching this to black. I'm going to be moving this 3 here and this 4 here. Okay, and then we're kind of, again, using that 50 SMA as the marker. I think that is what needs to hold in order for us to be able to say that we can still resume here this fifth leg of this fifth of this bigger third. Okay, now I would show you the more bearish version of this chart here on QQQ. So on the QQQ daily, I've got that here. Don't worry about the differing of the symbols. I have NQ and QQQ in slightly different degrees. If this low breaks at 387.53 in the Qs, I'm not going to panic yet. I'm just going to move this 4 over, and then maybe we're looking for the lower BB here at about 385 to offer some support on the Qs. A lot like what happened on August 4th, where we had that spike down on a Monday, it closed outside, and then we were able to start putting in an impulsive 5 waves up. So again, if gun to my head, if I had to say what's going to happen, I think that's what's going to happen. I think Monday is probably red. I mean, of course, I'll be pleased and surprised in a good way if it's not. That's what I'm looking at. Okay, so now just like the S&P 500, if we've put in a significant degree 3 top here, then I've got that more bearish count that would be taking us down through most likely the rest of 2021, possibly into early 2022. And we just really have to be on guard for that, because on the short-term Qs, it is developing a little bit bearishly. And this is actually SPX, but we could see the same on the Qs, that we could have a 1, 2, 3, 4, 5 down. And that's the bearish scenario that we have to look out for. So on the Qs, I have it a little differently because I think the finish on Friday was more bearish. A 1, 2, 3, 4, 1, back to a bearish 2 bounce, and we're in the heart of a 3. So if we just see a Sunday night, Monday tumble, and it tumbles beneath 387, then we've got to be on the lookout. We have to be open-minded to this, that we could be in this bearish blue. Okay, so I think we're close from a technical perspective to at least a nice bounce, but the damage is significant, and we've got to be very wary of this. This is not a time to try to play hero here and ape into a lot of long positionings, expecting this bounce. I'm in a majority cash. I did try to scalp a few things. I thought IWM and DIA at the close, both beneath their lower Bollinger Bands, was something I was at least willing to take a shot in a small position on an upwards move, but I've got very, very tight stops on those. So let's see what happens Sunday night in futures. Obviously, very, very interested to see where we end up going here. I'm going to be watching closely that NQ level of 15,896. If that breaks on the opener overnight, you're going to expect from me on Monday a recount of this, and then watch early this week for 50 SMA. Now, I would also point out there's a lot of technicians out there that are pointing out the same thing that I just said, that 50 SMA is a very likely pullback target. Yeah, what if it's too obvious? What if it's too likely and the market doesn't have it and it doesn't hit it? We've always just got a plan. We project a little bit, we monitor, and we adjust. And I would also kind of end with this. if you don't like the multiple perspectives that I give and that I chart, is simply don't follow Elliott Wave. This game is a probability game, and that means that with probability, you always look at alternate outcomes. When you flip a coin, it's not always heads. There's another outcome. That's why there's a primary count and an alternate count on my charts. It gives me invalidation levels to look at, and I try to position us according to what I see as the highest probability. But at the end of the day, price is king, and we let that be the ultimate arbiter of our decision making. So, hope you've had a wonderful holiday week. Hope the damage wasn't too bad. I certainly bought too early on some things on Friday. It took some heat. I'm always learning. Have a lot to get better at, but confident that we can decipher what's going to happen in the markets early this week, and then for the duration of December, we're going to be on the correct side of the swing. If it is going to be bearish, let me just point out to you what I would be looking at here short term on some bearish things is on SPX, the possibility of a move down, and then this could be the bounce, and that bigger bounce is what you would try to reshort. I typically don't try to play projected wave force on any direction, either short or long. Okay, but as always, just make sure that you got a plan. Trade that plan. Don't break any personal rules. And let's see what the market's going to give us Sunday night into Monday. I'll be quick to give you some updates going into the week.